across nicely.
Good.
All right, so thank you very much to everyone for joining us. This is the first time to join one of these calls. Yeah, what can I say? It's set up for you guys. If you've got questions, put them on the chat, put them in the Q&A section. We'll try to answer as many as possible. Really is something that we try to set up. And there's a couple of themes that if you've got questions on, I'm definitely going to go and call on, because they're the themes that I'm interested in as well. I love running these conversations with successful startup founders. I'd say that VALR is a really good example of that. We should be very proud of what VALR have done, especially if you're South African, the way that they've expanded, gone global, they're profitable, they're doing extremely well in an area which I think is technically complex. And it's going to be really interesting, therefore, to go and ask questions about how that success has been earned. I'm interested in understanding from founders the mistakes that they've made, the challenges that they've had, when they've decided to throw the towel in, but for some reason that they've kept going, who's been important in their journey for them to be successful, because these are all learnings that any business leader can take across. So I'm very interested in that aspect if you've got questions. Also very interested in just the market and in crypto. And of course, when we've got someone like Farzam on the call with such experience in this space, I'm not going to be able to resist asking about the future, where he sees crypto, stablecoin, AI, and some of the other technologies taking the world, hopefully in a good way. So with that, I better get on to the introductions. Farzam Ehsani, a very warm welcome. Thanks for joining us.
Thank you so much for having me. Great to be here.
So the basic story, I mean, we want to dig into this in a little bit more detail, but you came from a sort of consulting banking background. At some point decided to take the step across and go and build this incredible startup. So we're going to go and touch into that. But I want to start today, actually. Here we are, it's the 3rd of March, 6 o'clock here in South Africa. Just give us a little rundown about what VALR actually is as a company, what you're aiming to achieve, with the company, and the kind of the state of the nation, the health of VALR as we stand today. So we've got some perspective before we go back in time.
Sure. So again, thanks for having me. Lovely to be here, and always love chatting about this topic. So, and also all questions are on the table. So it's always good to have an open conversation so that people can benefit and we can both learn. So VALR is currently a cryptocurrency exchange that allows customers to come and buy, sell, stake, earn, trade, borrow. There's a whole bunch of stuff that one can do on VALR. But it's predominantly a link between traditional finance and this new world of crypto assets, cryptocurrencies. So we started the company 8 years ago. We started with the ability just to trade, so to be able to buy and sell Bitcoin. And since then, we've expanded to over 100 different assets. We have also expanded into margin trading, so you can get some leverage when you're buying or selling in the spot market. And then we also went into perpetual futures, which is basically the ability to trade futures contracts or perpetual futures contracts, which is a derivative. And then we've also gone into earning, where you can get some yields. You can lend into a loan book. You can borrow from that loan book. You can integrate into decentralized finance to get an earned yield on your funds. We have VALR Pay. So there's a whole bunch of stuff that we have. We have a new VALR bundle where you can get with a single click exposure to the top 10 assets on VALR, crypto assets, if you don't know where to start. So that's kind of where we are. We're now the largest crypto platform in Africa. It depends on how you count it, but we have trading volume of, say, about 25 to 30 to 45 to 35 on average $1 million a day. But if you look at all our flows on our OTC desk, then that starts looking at about $100 million a day. So you asked a little bit about what the future looks like. Really, what
and the customer base. Just that before we go into the future, there,
Sure.
give me some indications about the customer base and in these volumes. Who is it that's typically trading through the platform? I mean, is it large enterprise that are doing 135 million deal? and that covers your volume, or are we talking about 35 million
No,
customers
no.
doing a
So
dollar a
we have
piece?
about 1.7 million users, of which 650,000 are fully KYC'd. And then of those, we have about 2,000 corporate and institutional customers now. So when you look at our revenue comes about 50% from the retail market and 50% from those 2,000 customers that I just talked about.
Yeah, yeah,
We have a whole host of people using the platform for very different reasons. We have people that are algorithmic traders. We have people that are buy and hold customers. We have corporates that have Bitcoin treasury strategies that procure their Bitcoin from us. We have actually more recently, we have B2B2C business where we power the crypto infrastructure for many business clients. We're soon will be announcing there are about 3 of the largest banks in South Africa that will be powering, and also largest asset managers as well. So it's really moved from a very retail platform,
mm,
which was 8 years ago, to really powering a lot of the banks and institutions. And actually, 2 of the largest money transmitters or remitters in Africa use our crypto infrastructure to be able to use stable coins to offer savings accounts and things of that nature.
yeah.
So we've moved from retail to really a place where the world and the financial world at large is not seeing this as just a tangential asset, but it's actually some asset that's coming into the mainstream. But having said that, over the last 8 years, very few people have been actually building the infrastructure to get there. So
Mm.
while people are waking up to that, we are able to provide our infrastructure to a lot of institutions to piggyback on that infrastructure and to use it to serve their own customers.
Are you profitable? Because often when I chat with successful founders, it's they're incredibly valuable. They may well be worth, billions, but profit is a totally different concept for many as they reinvest and they scale and they expand. Are you guys actually profitable yet?
We are indeed profitable. We are not intending to be profitable. So when we talk to our investors, we're sitting on quite a large balance sheet right now that we want to deploy more and more. Some of that balance sheet is in crypto, which is part of our treasury strategy, which is we hold on to the crypto or specifically the Bitcoin that we have, and then we spend our OPEX from the fiat reserves that we have. So the idea is we want to be deploying more capital into growth, but we need to be wise about that. I think there's a very big ability for people to see, okay, we've got a big balance sheet, let's just spend it and hope it works well. We take a
Mm,
little bit more cautious approach just to make sure that when we're spending on marketing or expansion, etc., there's actually a bang for buck and a return on the investment that we're getting. In particular, at a time like this, when crypto prices have come down, then we ease off a little bit on the marketing because it's very difficult to market for new customers coming into crypto when the prices have come down. So now is the time to build, not to market.
yeah.
Um, and so, yes, so to answer your question, we are profitable. We don't, our aim is not to be profitable. Our aim is actually growth at the moment. But we're in the fortunate situation where we are profitable and we have a strong balance sheet as well.
And tell me a little bit about your geographical footprint. You obviously started in South Africa, but your customer base is not solely in South Africa, and with trading licenses in a number of locations, you've extended beyond the borders, I believe. Is that correct?
That's correct. So about 75% of our customers are South African, 25% of our customers are from all around the world. We are licensed in South Africa. We are also licensed out of Poland in Europe. We are close to getting our license in Malta as well as in the Cayman Islands. We had initial approval from the VARA, which is the regulatory authority in Dubai, but we've put that a little bit on hold for the time being. We're actually just trying to change that license to something else because there was some changes in the regulation there that didn't really suit our needs at the time.
Mm,
So we are South African. We've got our sights on the rest of Africa, but we also have a very big business out of Europe where we are one of, I believe, one of the from what Circle has told us, one of the top 10 minters of USDC globally, and also the largest minter out of Europe. So we've got a big stablecoin business as well, out of our European
Can you
entity.
explain what minting is?
Sure. So for those of you that may or may not know, but you've probably heard about the word stablecoin, and a stablecoin is effectively a token on a blockchain that, for the most part, is backed one-to-one by, let's say, $1 in a bank account, or $1 held in, a bond, a treasury bond, a US bond, as an example. But effectively, stable coins are meant to mimic the US dollar on chain, on a blockchain. And so minting and redeeming, when you talk about minting and redeeming stable coins, it's basically the ability to take US dollars from the traditional banking system, and basically convert them into a stable coin on chain. There are a couple of big stablecoin issuers around the world. The largest is USDT, or that is the stablecoin, but Tether is the company that issues that stablecoin. The second largest is Circle, and their token is USDC. And so we help our customers effectively go in and out of those stablecoins with the ability to transact globally. And it's very exciting because historically, global finance has been a game of kind of you execute and you wait. Either in a best case scenario, hours, worst case scenario, literally weeks. We've had situations where we've had to wait weeks for some of our customer funds to land from them to us. And so we're talking about moving from that world into a world where value is being transacted across the world in a matter of seconds or minutes, and at a fraction of the price that we've been used to. And that's the promise, and that's what excites me about building what we're building, is that we're helping to build the infrastructure of the future of finance.
So let's dig into that. You're helping to build the infrastructure of the future of finance. What is the purpose of VALR, and how important is purpose compared to making profit and generating returns for your stakeholders?
So you say purpose, we actually talk about values, and they're similar but not the same, obviously. Our purpose is really to advance the economic system for humanity and to serve our brothers and sisters around the world, right?
Yeah.
That's really what inspired the establishment of VALR, which is really to move the world forward, right?
So let's dig into that, because that very statement suggests that when you started VALR, you weren't particularly happy with the financial system that was in existence at that point in time.
Oh, that's correct. And I'm still not happy with the financial system that's in existence at this point of time. So I think there's a lot that's
Okay, so
lamentably
what's wrong with
neglected.
it? What is wrong with our current financial system?
There's a lot that's wrong, but I think the first thing that's wrong is that it's so fragmented on a global scale. So the world that we live in right now is a global world, despite the what's going on as far as like some nationalistic tendencies in certain parts of the world. Um, the world over the past few decades has moved from a world that's been very fragmented and stayed like stuck in its nation states to a world where we're connected. You're literally on the other side of the world, right, Colin? And we are talking live, regardless of all the borders that are between us.
Yeah.
Okay, so the packets of information that are allowing this video conference to happen are moving regardless of what a political or a politician says about what the border is, and these packets of information don't care what we call a particular part of the earth. Okay, I believe value should flow the same way, right? And right now, our value is stuck oftentimes at the borders and the interfaces between the different economic systems and the financial systems that we have. And beyond that, whenever they get stuck and they move from one financial system to another financial system, from the rand to the euro, from the euro to the dollar, there are always frictions that cost money and effectively go into the pockets of intermediaries. VALR is also an intermediary, but historically, those intermediaries, I feel, have taken far too much. I think finance is taken such a predominant role in our society that I actually think it needs to be reduced. I think that finance needs to become much more in the background to allow the real economy to flourish. So what we're hoping to do is to just create and to contribute to a system where funds flow easily, where it doesn't matter who you are, where you are, but that funds are flowing easily, right? Right now, of course, we are subject to things like sanctions and KYC and things of that nature. But the way the world is moving is that the flow of funds is going to be much more seamless with much less friction. And so if there's
Mm.
one thing that I would talk about, the problem of the world is that finance has too much friction. And we are trying to reduce that friction.
This is I think a fascinating piece because let's bring stablecoins into this because I think in terms of reducing friction, stablecoins are very obvious method to go and because actually compared to Bitcoin and many of the other cryptocurrencies and sort of crypto analysis and wallets, I mean the one thing that does seem to be working for cross-border is stablecoin, USDT and USDC. We've got billions of dollar equivalents moving seamlessly across borders and really helping companies from all different sizes to go and distribute. I was reading about Deal, for example, who look after a lot of remote workforces and how they're using stablecoin. Maybe they're one of your clients, and I can see real value in that. The area where I worry about though is, and I can't believe I'm saying this, is on the regulatory side because there's a couple of aspects about financial systems where you could argue we need centralization. Governments need to have control over their currencies. That's a question, I suppose. Governments or industry bodies need to have control over people to a certain degree because we don't want money laundering, we don't want terrorist financing. And so where do you see, and some of that causes friction. And so I guess there's some friction which I see as potentially good because we have to have it to maintain a sensible monetary system and to avoid funding things that we don't want to. And then there's bad friction because there's just too many players, too many intermediaries, too many people skimming in terms of banks and correspondent banks and various laws that are out there which are completely irrelevant. So how do you see that balance? Do you see it being completely moving outside of these centralized controlled systems? Is this a good thing? Where's your stance on this?
So I think important for our listeners to know that the beauty about crypto assets is it's the first digital asset that can be custodied without the use of an intermediary. So
Yeah.
what I mean by that is that in our traditional system, whenever we have money that's not physical cash, that money is held in a bank account on a server somewhere. And historically, that server has been, is belongs to an institution, a bank, or any other type of financial institution. And those financial institutions, of course, are regulated and they have to abide by KYC and AML and sanctions and all the things that you just talked about. And of course, in many ways, that's good because we don't want to facilitate any, let's say, malicious activity globally, right? No, like I was going to say nobody, I suppose the people that are doing it want to, but for most of us, we want to make the world a better place. Okay.
Yeah.
Having said that, crypto assets is the first time where it's like I can now send value peer to peer between me and somebody else from this side of the world to that side of the world at a fraction of the cost of what traditional finance has done for me, and it can get there without touching a single financial institution. Right? So that technology is available now. It's there, right? And so regulation needs to come up to par with that. Otherwise, things will start building in the shadows, which is what has happened in many parts of crypto historically, because it's been difficult to get bank accounts or to build in that space. DeFi, decentralized finance, has basically flourished and has gone and become much bigger, which is just you need an internet connection. So the reason I share that is that our regulations and our laws need to be updated to the new technologies that exist, right? The intention can still be there. We want to stop illicit activity. We want to stop funding of terrorism. We want to stop any money laundering and things of that nature. But in a world where assets can be held sovereignly by an individual, we need to have a relook at what that looks like and then adapt accordingly. Historically, regulation catches up to the technology advancement. Regulation doesn't become an inhibitor for the progress of humanity, right? It doesn't get in the way. So progress finds a way of making its way forward, regardless of the vested interests. And I'm not just talking about regulation here. There might be vested interests that want the world not to move in this direction, but to stay the way it is because they're making a lot of money. Okay. So all of that to say is that regardless of what the regulations currently are, there is always progress. And I think the risk that is run by regulators around the world is that those regulations are not updated, and therefore you have parallel financial systems that are actually, they don't have the protections of a regulated market. So our hope as VALR, and what we talk with the regulators about, is to say, listen, we are a centralized exchange, we are an intermediary, we are subject to all the rules and regulations that are there. But what we want is that any of the stuff that's happening in the shadows, for it to come to VALR as an example, right? Where there's a trusted intermediary that's regulated and that has a lot of the provisions that are in place to protect customers. So oftentimes if you go peer-to-peer, if you do P2P trading, there's a lot of scamming and there's a lot of fraud in that space. But if you come and you trade on VALR, well, you know who we are. It's a centralized exchange. There's some security and some benefits to that as well. So all of that to say is that yes, the world is changing, but this is not a new story. Regulation needs to be adapted and to be brought up to speed with what's happening with the technology in the world.
Do you believe that you should be regulated?
So I think there is a need to ensure that the players that are positioning themselves as institutions that are serving people are indeed serving people, right? So I think there's a lot of fly-by-night people and operators that do not have the best interests of customers at heart, and that we do well to have a situation where people will need to get licensed and have to go through the scrutiny of getting licensed, which VALR is now, to ensure that the end customer is not left to themselves to figure out who is actually a good player and who's not a good player. So I think there is some great benefit into having licensing and regulation from that perspective. I think there's great benefit in ensuring that, for example, there's capital that's as it should be, that there are external people that are checking to see that, for example, VALR has the money that it says it has, right? We're not a bank, so we don't do fractionalized lending. So the money that you have on VALR is backed one-to-one, right? We can say that, but it's helpful for there to be scrutiny on that, for VALR and for all players, right? Having said all of that, I do think that there is a lot of regulation that adds cost for society, but that doesn't stop the malicious actors, right? I think a big one is KYC, right? We do KYC, but I think we need to really look at what KYC is, and I think there might be on-chain. There's a lot of on-chain activity that's happening that could start to look at how we reinvent what KYC is. But oftentimes you KYC customers so you know who the end customer is. But in finance, you have a lot of what are called mule accounts, which is someone that is malicious that may go and get Colin, who is a good guy, and say, hey, please sign up and give me your credentials, right? So we have to have all sorts of stuff in place to detect that, to stop that, etc. But ultimately, KYC is a very big cost that comes with that is borne by society at large. And I think we need to re-look at kind of what's working and what's not working. So is regulation needed? Absolutely. But it needs to be the appropriate and the correct regulation so that we don't bloat the cost base of regulation for the end customer, ultimately.
A question here from Lucia. It's quite a long one. I think you can see it and read it, but I'll just summarize it. I'll shorten it a little bit. When I think about crypto, the whole gig, the whole thing that was sold to most people is this is a peer-to-peer network where, we can have a trustless situation, no centralization. We can break away from the governments and the centralized bank and the banks that are basically de facto owned by those centralized banks, at least in terms of credit and so on. a very cozy little club, and crypto starts to disrupt that. And yet here we are seeing lots of regulation pushing it back towards control and centralization. The very fact that you're bringing people to crypto via an exchange for profit is kind of interesting in that space. How do you see this kind of playing out? I mean, it feels like we're breaking the boundaries of what we originally tried to do way back, with the original Bitcoin.
This can be the whole topic of the rest of the conversation if you want. Um,
And you've got
so
to answer that in I don't know, 30 words or less.
yeah, exactly. Um, Let me put it this way. The financial system today is going to look nothing like what the financial system in the future looks like. In the same way, like our financial system today looks nothing like it was when people were using cowrie shells to transact, right? And my firm belief is that the future, and I don't know exactly the timing of all of this, but I don't think we're going to have a multitude of fiat currencies globally that are associated with the nation state going forward. I think that we will uh, ultimately humanity needs a uniform and universal system of currency. I think, you have to stay humble about these things. I think that that money will be cryptographically based, i.e., it will be a crypto asset of some sort. And I think that the future of our current financial system has a lot of crashes in it, where the things that we take for granted right now, like the US dollar and the euro and other things, may not be there at all.
Mm,
That transition will be tumultuous. But I think there will always be a need for people to interact with one another. People will need more help than other people. The beauty about crypto is that if you want to do it yourself, then you can do it peer to peer. If you need help from an institution like VALR to kind of hold your hand, we're happy to serve you. So we're not going to be going to a completely decentralized world where institutions and financial institutions don't exist. People forget that we came from a decentralized world. When people had their own gold coins on their own cowrie cells, that was as decentralized as you could get. And then we moved into this, centralized world where there's really concentration of power in financial institutions. And now the pendulum is starting to swing back a little bit. But we're not going to be at the extremes, is my view. And so the world is changing. I think there is space for lots of things, people to do finance themselves, which this crypto asset universe allows, but also for institutions to bring buyers and sellers together in a secure environment, which is what VALR does. And so it's very tempting to have dichotomous answers to these questions, like it's going to be like this or it's going to be like that. No, I don't think that's the case. I think there's going to be a plenty of opportunities for different types of models and for people to flourish in the way they wish.
let's go back in time, and then and we'll bring it forward. And then I see Alvin's got a question, but I think I want to cover that a bit later. I want to go back now and kind of do the founder's story a little bit here. Why did you set this up? I mean, you got a cushy job. I think you were at R&B at the time. Um, what
Mm.
led you to actually go and I suppose have the guts or stupidity, you tell me, to go off and embark on this at a time when, this was incredibly risky. And then you went and found someone who's equally crazy, in my opinion, but is absolutely amazing with Michael Jordan to go and help fund this. How did that all come about?
Yeah, I remember clearly. I was looking out the window at my desk at RMB. Obviously, this is just one moment. There's a longer thinking process. But in that moment, I kind of thought to myself that this is a very comfortable job. I'm getting paid very well. Um, and would I be proud of myself if I stayed on this trajectory for the rest of my life, looking back on my life in the future? And I felt that I wouldn't have A, met my full capacity, and then B, I don't believe my life is about being comfortable and just kind of taking care of myself with a nice salary and then not trying to make the world a bit of a better place. And so I thought that I would be disappointed with myself if I just stayed for the comfort. And
Mm.
so, kind of with that feeling and
But
with
this is
my
where you
found,
obviously have had an epiphany and you thought, let's go and join an NGO, or go and work for Oxfam. Not many people go and go down this particular route.
No, I think I was at the time the blockchain lead at RMB in the first rank group, and so I also realized that this is a world that people really don't understand, and they have such opposing views. And I think there was an opportunity. Like if this world of crypto assets was as promising as I thought it was, then there was a potential to actually go and A, progress the world, and B, potentially even be more comfortable than I was with my corporate job, right? It was very
Mm.
scary, very, very scary. I remember times just thinking to myself, what are you doing? Because you're leaving that comfort. But I have a few wonderful, amazing co-founders, and basically decided to just take the plunge. So, and
And how
also,
did you do it? Did you was it a bit moonlighting? You're kind of doing a bit at the weekend. Did you cut
mm,
ties formally with
yeah.
R&B and get started and go and buy a garage like all startups and club together and just get them coding away and building your platform? What was the journey?
So we were building a lot within RMB, and there was specifically there was a big governance committee meeting, and I remember I was on paternity leave at the time, and so I wasn't able to attend. But I heard that the response to the progress of the project that we were working on was not positive. And so I remember thinking, okay, that's a clear sign, and this is a good time to say goodbye. And so my first day back from paternity leave, I submitted my resignation, talked to my boss about what we were trying to do, and then I was out of there a few days or a few weeks later. I think it was a month later, and then we started building. So no, it wasn't really. I was actually very hopeful that we could do a lot within the bank, but I think the bank, for good reason at the time, banks are risk averse. Wasn't ready for it. This was more than 8 years ago. This was 9 years ago. Um,
But you knew you were building an exchange.
yeah,
You knew you were building it to allow people to trade in something which is pretty esoteric at the time and would be very difficult to explain to people. And it's not like a share which most people know, or a bond or something. It's something which they really need to be taught.
yes,
In terms of the risks and the rewards. You knew you were doing something which was going to be regulated,
ultimately regulated.
either by the SARB or
Ultimately,
the FSCA, which brings massive amounts of cost and expense. So this wasn't going to be a cheap endeavor. And you were building something where you couldn't have been sure that you'd even find liquidity. Who's going to market make and actually allow people to go and buy and sell and provide liquidity for this to actually occur? So surely when you walked out, I mean, these are so many barriers. Most people don't do startups when there's one barrier. But I mean, and if we went on, we could probably list another 10 about why this was just a crazy thing to do, and you should have left this to the JSE or to Easy Equities or to Coinbase, and maybe they can come over and set up a smaller unit here in South Africa. But you went for it. Why? How did you, convince yourself and your colleagues that this was still doable? And you had to build it because nothing existed.
well, I think first of all, if I had thought like that, I wouldn't have done it, right? For obvious reasons. So I wasn't thinking about liquidity. I wasn't thinking about regulation. I was just thinking, can we build a platform that works? Like that's the first step, right? The second step after that, of course, you need liquidity. Of course, you need to ensure. Like we did those things as and when the right time was right. We went to, as an example, only once we decided to start did we try to figure out, okay, what is the regulation in here, and like how do we actually do this? And we sat with the Financial Intelligence Center, and we sat with the SARB, and we sat with the Financial Sector Conduct Authority, etc., before we launched to kind of get their views. Um, but what was clear is that there is going to be a way, right? It has been done elsewhere, so why should it be any different for us? Um, I think the biggest thing for me was being comfortable with failing.
Mm.
I did very well at school and in my career, and I had A's and all that kind of stuff, and I was used to not failing. And I think that was my biggest barrier, which was that I was worried about what would happen if I failed. And so I think I got to the point where I said, well, if I fail, it will be okay. I have no issue going and asking for a job again or try to apply for a job. Actually, today I have no issue if I needed to support my family, go and flip burgers. I have no issue with doing that. I really don't. So I think it was that acknowledgement and realization that failure is okay that gave me the courage to try.
And what about financial failure? Because I assume you actually had to put money into it initially from your own pocket.
Yes, we didn't have much money at the time. We had a few months that we could kind of go, and that was kind of our line, our runway. Um, but Colin, I am so blessed. You're so blessed. Like I have an education. I have some God-given capacities that I can put to use that I really believe I will ultimately be able to put some shelter over my head and some food into my mouth. At the time, I didn't have kids.
Mm,
Um, we don't need much to survive. We really don't, right? And like we get caught up in this. Oh, am I getting richer? And I have a bigger house, or that, and also that stuff doesn't really bring you happiness, Colin. So
mm.
I I honestly feel like even right now, I feel I don't need any more. Like I am really I'm happy with the physical stuff that I have. I think the stuff that I aspire to get more of is the refinement of my character. There's so much to do with the soul, and this now starts becoming a more spiritual conversation. But I all of this back to the physical stuff, which is to say that you don't need much. So it's just I think people's fears and their fears also of what other people will think that get in the way. And so I was happy that I was able to conquer that and just give myself a shot.
At some point, you decided that you needed funding. Um, talk me through, that particular thing. I guess it's always interesting for entrepreneurs, those first initial steps. A lot of people try to bootstrap, for example, and fail because they tried to bootstrap because they miss out on the capital they need to actually scale, and therefore they fail faster and actually just lose everything. I see a lot of people doing that, and it doesn't make much sense to me. You didn't go down that approach. I think you got funding relatively early on.
Yeah, so I mean, we looked at even in the early days about setting up in Mauritius because of exchange control regulations in South Africa. I remember at the time it was about 300,000 Rand that we would need to actually go and set that up. And between myself and my founders, we just didn't have that extra cash lying around. And so we set up in South Africa because that's really the only option that we had. And we were not in the position where we had a ton of money that we could just lean on to build for a year or more. And so we went out and we started actually the conversations with investors started very early on, as soon as we could. And then Michael Jordan ended up being our very first seed investor. And he invested, I think, about 6 weeks. Yeah, about 6 weeks in.
Six
So,
weeks in, you hadn't
so
even finished your first build yet. I mean,
oh no,
you
no, no,
probably
we had
didn't even
nothing.
have a
No, no, no,
you
no, we
didn't
had
even
nothing.
have anything to demo. You just had PowerPoint. How
No,
so?
no,
This
no,
is really important.
we didn't have
How
PowerPoint.
did you actually convince him? What can people that are going through a similar journey, whatever it is that they're trying to build, whatever product they're trying to produce, what were the lessons that they can take away from your experience? I mean, it can't all be we need to go to Michael because he's obviously got a very good track record, but.
Yeah. So first of all, the story is interesting with Michael. I had written a paper called The Advent of Crypto Banking, and I had published
Mm.
that. He then read it. I don't know how he got his hands on it, but he reached out to me on Twitter, I think, just to say, we really enjoyed your paper. And then we started chatting. And then he was actually very instrumental because he encouraged me. He said, startups are the way to kind of move the world. And so he was a great encourager. And then he basically, when I had the idea, I approached him and said, "Would you back us?" And he said he gave us a little bit of money to start off with. So I think I was very lucky from that perspective. I think we all need to just kind of see what avenues that we have available to us are, what doors are in front of us, and knock on those doors and see if they open. So I
Mm.
think I have a much bigger network than some, but I have a way smaller than network than many others, right? So you kind of just do what you do with whatever you've been dealt in life and try to do your best. So I think that's my philosophy really is just do your best. Just try and see what comes.
So networks are key, and that whether people like it or not, this comes up a lot. So if you're born and bred and learn all your stuff in Silicon Valley, you've got a network. You can go and reach out to that network through all of the universities and the business schools, and you've got this massive advantage because they're born risk takers and they've got this kind of 60-year history which they kind of just keep on auto repeat. If you're sitting in another part of the world, that's not necessarily the case. We're a little bit behind in South Africa a little bit, but we're making progress. We're getting better, at doing this. I think it was 2022 when you got your biggest round, wasn't it? Was it
That's
40 odd
correct.
million that you got? And most of those investors were
50.
internationals. How did you go about that? Again, because a lot of people seem to struggle to get foreign investment into their South African entities. There's different approaches that guys are taking. I've seen guys that actually move to the United States to try to build those networks. There's others that join things like Y Combinator and these other incubator platforms, so that they've got those networks. What was your approach? How did you manage to go and build that network to go and get these international supporters?
I think there was a lot of reaching out to a whole bunch of people, even cold kind of emailing and cold calling, and but the most effective are the
Literally
ones
cold
that
calling.
I don't think cold calling I would have done actually, but cold emailing for sure, or cold messaging
Wow.
on LinkedIn, or cold
Yeah.
whatever it may be, right? Or even on Twitter. Many people have just reached out on Twitter, and many people don't respond, and some people do, right?
Mm.
Um, so cold calling is just a larger kind of message, just to say just reach out to people cold, right?
Yeah.
Um,
And you
Having
and
said that,
just I mean, I mean, you were actually doing that. I mean, I see. That's such a brave thing to do. So many people just don't do that. They try to delegate it or they don't like it. I
oh
think the ability to reach out to people who you don't know is such a skill, which if you're a founder, you have got to learn it.
yeah, I would say if you're not comfortable with that, there's no way you can think about having a startup, like
Mm.
or getting funding. Now, having said all that, the most strong connections are those that are warm, right? So if you do have a lead and you have a chat with them and you ask them, is there anybody else that you can put me in touch with? That is definitely the best way to meet people, because there's somebody that's a mutual connection that can put an introduction together for you. So that's definitely the best way. But there are definitely stories of cold uh, emailing or cold messaging that yielded fruit, right? So um, and then the other thing, again, you need to be comfortable with the rejection. I would say when we raised $50 million in 2022, many people said no. Many people said no. Right? We were oversubscribed ultimately, but it's okay. Rejection's okay.
Mm. Now, I look back over the last 6 or 7 years, and there's one thing you can't say that Bitcoin has been, and that's been stable. It's all over the place. And then if I look at the wider industry, there's been so much volatility in that space. It's just absolutely incredible. As you've gone through that journey, I'm imagining there have been a couple of moments where you've actually thought, I don't know, where you potentially thinking about having to shut up shop, or you're having to pivot significantly, or you're just looking at the market forces. I mean, look at Tether, for example. I mean, you mentioned USD. That's not helpful when you've got companies that are sitting there saying they're hedged and they're not, and they're spending their money rather than buying treasuries, to go about other aspects of their business. So it must. I mean, I suppose what's the question? How stressful has this journey been? What sort of pivots have you have had to do, and have you actually reached a point where you thought you'd have to close shop?
I don't think I was this gray when I started. With a few more hairs on the top of my head.
No, it'd be
Um,
funny if you came back and say, "No, it's been as easy as pie. Anyone should do this."
you know, finance is difficult because you're managing people's finances or holding people's finances or the custodians of people's finances. Crypto is difficult because crypto has been for a long time kind of in like bathed in this light of illicit activity, and that it's a scam, and the whole industry is a front for something else, etc. And I was one of those, right? When I first heard about Bitcoin, I thought it was an absolute scam. And I called my friend who was in it, said, dude, what are you doing? Like, you shouldn't be doing this. So, so it has been very difficult in many ways. But, just like getting a bank account, you kind of take that as a given when you're starting a company. I'm just going to get a bank account so I can put some money in it, and then I can pay my employees or whatever it may be, or pay my operational expenses. To this very day, there are many countries where we cannot get a bank account, right? So, so there's still challenges with banking globally, right? And on top of that, security is something that's always, always, always on the top of one's mind. You can never be complacent about the security of your platform. So VALR, we invest a lot in our cybersecurity, in making sure we're as secure as it can be, but 100% security doesn't exist anywhere. And so that is always on my mind. Last thing on my mind when I go to sleep. First thing I think about when I wake up is the security of the platform. Right? Particularly, as you know, there's been a lot of cybersecurity breaches in the past. So that's one thing that the stress will never go away. Having said that, you learn to manage it. People are adaptable, and I think we're doing it for a very worthy cause. And I think we're making a big impact on the world. We're taking the world a little bit forward. Having the conversations, building the infrastructure, and so I'm very excited about that. But anything worthy comes with stress and is difficult.
Mm.
So not something to worry about.
When when you got your first regulatory fine, that must have been quite stressful.
We've never had a regulatory fine.
You've never had a fine, never. There's never been any pressure. Oh, I've been misinformed.
Where did you get that? Where did you get
Oh,
that? We have never
well,
had any regulatory.
well, that's a massive tick in the box. That's a proper feather in your hat because you must be one of the few exchanges that's actually managed to go from start to where you are now without actually having any problems. That's incredible. You deserve a massive pat on the back for that.
Thank you. I mean, I think just to say, like, from day one, we were not regulated at the beginning. There was no regulation to regulate us. Many of
Mm,
our competitors at the time didn't have any KYC for customers that came onto the platform. We went to the regulators. We said, "This is what we want to start. Can we start it?" They said, "There's no regulation." So I said, "Well, does that mean that we can't start it?" They said, "No, you can start it, but there's no regulation." So we kind of looked at where things were going, and so we decided in 2018 that KYC was going to be something that is going to be done. And so
yeah.
from day one, we've KYC'd every single customer that's come onto our platform, and there hasn't been anybody that's been able to trade a single cent on our platform without us knowing who they are. And I'm proud of that from the perspective that that was what's required from a regulatory perspective. And I don't think there are many platforms that are 8 years old that can say that. But it has served us to ensure that we are on the right side of the law. And just to say, I don't necessarily agree with all the laws, but we are a regulated institution. We have to abide by those laws. So when I don't agree with those laws, we talk to the regulators and we say, guys,
Mm.
this doesn't make sense. We need to move it forward. But so long as it's a law, it's a law. We have to abide by it. There's no question about that. So I'm proud
Oh,
about that. But it's to your point at the beginning, I think it's really important. And I say this to our employees. Many companies' North Star is money, is just maximization of money and their profit at all costs. That is not who we are. And I tell our investors this, right? Our North Star is our values and doing the right thing to move finance forward, to serve our customers. We obviously need to make money to pay our salaries and to give returns to our investors. But when it comes to sacrificing money or values, many people will sacrifice values for money. We choose
mm.
to sacrifice the money for our values. And once you do that, you can sleep well at night, right? It doesn't mean the stresses go away, but you're confident that you're doing your best and there's not more you can do from that perspective.
Yeah, I think that's such an important point. A couple of questions that I need to go back to. So, Dr. Alvin
Sure.
Shikamba, sorry, what's your take on whether platforms such as VALR enable or work against dark web transactions? And then while you're just pondering that one, there was a question about um, DAT companies. I don't know what DAT companies are, but
That are
maybe
digital asset
if someone
treasury.
knows what a DAT company is,
Yeah,
you know what it
that's
is,
a
do you? Okay,
digital
great.
asset
So that will
treasury.
be the second
Yeah,
question. So yeah, what's your view in
sure.
terms of enabling or disabling the dark web?
So we are a regulated platform. That means that we cannot facilitate funds that are illicit. We have a big compliance department. We have a fraud department. We have financial crimes department, right? So we are always monitoring and making sure that the flows that kind of go in and out of VALR are appropriate, right? And when they're not, there are things that you have to do from a regulatory perspective to either report them or to stop them, etc. Right? So that's from a legal perspective, but from a moral perspective, I don't want to be facilitating those flows. That's not what excites me about building VALR. So
Mm.
I'm very much aligned with the regulatory approach there, which is to say we don't want those illicit flows on VALR. We there's a lot that's wrong in the world, and I don't want to be building a platform that facilitates activity that doesn't serve society and humankind. So that's the first
Okay.
thing. The second thing was about DATs. What's the future of DAT companies? So for people that don't know what DATs are digital assets treasury companies. An example is Strategy, or they used to be known as MicroStrategy, which is
Hmm.
Michael Taylor's company. We have one in Africa, Africa Bitcoin Corporation, ABC. Um, so, let me put it another way. VALR is in many ways an OG DAT company, right? And maybe let me explain this. We earn our fees in Bitcoin as well as in fiat currency, and as well as in other different assets that we have traded on the platform. Our view long term is that Bitcoin is going to do well. And so when we earn, let's say, Bitcoin and ZAR, Rand, South African Rand, what we do is we sit, our treasury strategy is to sit on the Bitcoin and to spend our Rands on operational expenses, cloud expenses, legal expenses, salaries, etc. Right? And so a big part of our balance sheet right now is Bitcoin. And we're holding on that because we believe that Bitcoin will appreciate significantly over the future, as it has, even though it's 50% down right now. I mean, a few years ago, if I had told anybody that, actually, this is an interesting thing. I was on a call with Bruce Whitfield on the
Yeah.
radio, I think in 2017, if I'm not mistaken. The price of Bitcoin at that time was 60,000 Rand. And he said, where's the price going? I said, listen, it's going to be volatile, but ultimately I think it's going up. And I got a call after that interview from someone that said how irresponsible I was to have made that comment on public radio. Right. So now we're sitting at above 60,000 US dollars, right?
Mm.
More than 15x of where we were just a
Over a
few years
million rand,
ago,
yeah.
but we're still down 50% from the top. So my view is that Bitcoin specifically is not going to stay in this range. It's either going to go to zero or it's going to go far, far higher. So I don't believe it's going to zero because of all these beautiful attributes it has as a technology. And I think that we're going to see it go much higher in the future. But again, it's not financial advice. People should make their own decisions, et cetera, et cetera. But I'm very, very bullish about crypto assets and particularly Bitcoin for its role in the future financial system of the world.
All right, a few more questions. Geez, the time's gone very quickly this time. Maybe we should have set it for 90 minutes. We'll have to do this again. But anyway, practical question. When we're committing to use VALR Pay for local payments and then open operations in Europe and Australia or the US, how easy will it be to continue using VALR Pay at those locations? And if any of these are too technical or going to take too long to answer, we can always try to convince you to respond directly as well. But that one, let's see.
So we are now in the middle of actually building a big payments business at the moment. We already are a payments business in many ways. We are also what's called a TPPP, a third-party payments provider. But the short answer to that question is that you'll be able to VALR Pay is effectively the ability to move assets between different VALR accounts, right? And so that will be available for anybody to be used on the platform to any other user on the platform, anywhere in the world.
Mm. As an aside, do you see crypto? I guess we're getting to the sort of yes, no, quick answers, but do you see crypto ever being a reasonable mechanism for trade in terms of at the retail level for purchasing in an efficient manner? At the moment, it's still too slow and too expensive in general.
Without a doubt.
Is that coming soon, or is this something a decade away, or we're not sure yet?
I mean, already 700,000 merchants in South Africa accept crypto, right? Is facilitated. You can use VALR Pay to pay for your plane tickets. You can use VALR Pay to pay for a whole bunch of stuff. Now, granted that that's a layer on top of crypto, but you can literally use your crypto to pay for those things, right? And so I think there's going to be a whole bunch of financial infrastructure that's built such that you can pay with crypto, and you're not waiting for a block to be mined in the next 10 minutes, as an example. That doesn't make any sense, right, for Bitcoin.
Mm.
But not only will it be built, but it has been built. And in South Africa, we're actually leading the way with, as I said, over 700,000 merchants right now. To this on this day, right this moment, you can go and pay for your groceries, Pick and Pay with crypto. You can go and pay for a whole bunch of stuff with crypto directly from your VALR account.
Do you see it being Bitcoin that's going to be the platform for that, or is it going to be, some other variation where there's proof of stake, or there's some other mechanism which allows those payments to go through quicker?
Very difficult to say, and this is where I like to just make sure I have my humble humility hat on, which is to say, I think it's going to be cryptographic. Is there a chance it's going to be Bitcoin? I think there is. Is that set in stone? No, it's not. I don't think it is. Other people will say it is. I don't think it is for sure. And maybe one other thing is I think that the future there will be. Let me put it this way, very quickly. This might be interesting for some people. We've gone from a world that's gone from natural issuance algorithms of money, which is shells and cows and things of that nature, which you mine gold, even you mine it, right? And we've moved to a world where it's human issuance algorithms of currency, which is our central banks. Then we've gone to Bitcoin right now, which is a dumb issuance algorithm, which is, when I say dumb, I'm just saying it's just straightforward. But I think in the future we might see algorithms based on social justice integrated with our monetary base as a means for advancing the well-being of society at large. There's another podcast just on that statement right there, but I think there's a lot more to come. Let me put it that way.
I guess we'll have to come back to Lizette and Lucia, some of those other questions. As I'll send them through and try to convince you to answer them and drop a note, and we can and send it back to everyone. In our 2 minutes that's left, where do you actually hope to see VALR going over the next couple of years, either in terms of geography, asset classes, etc. You've got this vision in terms of improving financial services or financial access for the world, for everyone. What are your next steps to try to enable that?
Yeah, so I mentioned payments. So we've kind of made sure that crypto being a store of value, does this thing have value or not? People could vote with their money on VALR. That was our business model to date. Next is payments, which is movement of money around the world, which is what we're working on. We're also working on moving out geographically to areas now that we can start playing in. Kenya's just had a regulatory regime that is allowing us to enter Kenya as an example, and I think that's going to be opening up more and more. But ultimately, I think that we are effectively building to become a financial institution of the future. We're not going to be a crypto exchange forever. That was just the entry point. But ultimately, I think the whole of finance, which is money storage, transfer, exchange, provision, protection, all of these things we're building. And there are many banks that do a lot of that stuff, but we're effectively building a financial institution that will serve people's financial needs in a new way that's quicker, cheaper, better. And that's what we're aiming to do.
That's awesome. So everyone who's still on the call, really, thank you very much for joining us. I'm sorry we didn't get through all the questions, but that's kind of my fault on something like this. We should have set it for a longer one, a longer session, but maybe we'll do another one. We can chat about that, and I'll certainly ask if we can get some of these questions asked and answered for you guys. Please drop your feedback in the comments before we close. Always good to get it. You can email me directly. If you've got thoughts about future interviews, obviously just share those details as well. We can't close, and I keep forgetting at the start, but we can't close without thanking our sponsors. So to Silicon Overdrive again, thank you very much for backing us. These wouldn't happen without you guys. Anyone out there that's interested in cloud or AWS, whether it's getting your free credits or moving across from GCP onto their platform, give us a shout and we'll definitely put you in contact. I think Ross Dave and his team do an awesome job, so well worth reaching out to. And of course, we couldn't do this without AWS support and Henry Zietzman as well. So with that, we've just slightly run over our 7 o'clock. I wish you all well. Thank you very much for joining. And of course, the biggest thanks of all for Farzam. Thank you very much for setting aside the time and joining us. Really, really do appreciate it. Thank you very much.
Thank you so much, Colin. I enjoyed it. Appreciate it. Bye-bye.
Bye-bye.